Fortunes aren't built on diversification. Ego, does not serve us, right? Being right, like, for ego's sake, doesn't serve us, right? I always think of the three tiers. There's I have mentors, right, that I learn from.
Sometimes I learn from other people. I'm like, wow, you are a phenomenal communicator. I want to make my concentrated bets on things that I feel better about and that I have maybe more control over.
Yeah. And I'd love to disagree to create more interesting conversations here, but I agree 100%. You're just going to lose. It's just like the goal. It's a distraction, right? Picking stocks, it's gambling. The idea that you can grow your wealth quickly and get out of the situation you are in is very attractive to people who feel stuck.
I want to get better at. Now, if you want the greatest returns,
I just think it's accurate. So I just assume 4% inflation because the government's they have a lot of debt. Welcome to the Dental Real Estate Partners Show. Our wealth strategy session today, fortunes aren't built on diversification. This is a fascinating and controversial topic. I love this one. With me, as always, is the Sultan of Smart Money, Dr. Reed Faldet. Reed, how we doing?
doing good, doing good. This topic came after like a nice fun Facebook debate the other day. So it was me versus a heavy stock market investor. We're just like, let's throw some punches. It was all in good fun, just intellectual debate. So this is where this stemmed from.
Someone had a different opinion than you on Facebook. Imagine that. Imagine that. Uh, in general, though, I feel like most Facebook, especially Dennis, I feel most folks are pretty respectful and value each other's opinion, right? We're here to learn, and I've learned a lot. There's probably no place I've learned outside of doing. That's probably the number one way I learned. But
Yeah.
outside of that, like probably Facebook groups, and not only sometimes is it like a deep dive, but at least it clues me into a topic that I want to learn more about, right?
Mhm.
So it's a great opportunity.
Yeah,
Okay, yeah. Why
there's
don't you frame this a little bit for us?
Yeah,
This
yeah.
is
So I'll just want to comment quick on what you said. So just I believe wholeheartedly in this phrase, strong convictions loosely held. Have you heard that before? Right. So just essentially like you do want to be strong in your convictions, but you want to be open-minded enough to take in new information and be able to adjust over time. So like I like a little healthy debate, not because I want to prove that I'm right and another person is wrong. I want to stress test the idea or the concept because if it doesn't hold up, I can change it because ultimately I'm trying to get down to ground truth and that takes a little bit of pressure sometimes. So
Yep. Ego does not serve us, right? Being right, for ego's sake, doesn't serve us, right?
yep.
I'm the same thing. It's like I want to learn, I want to challenge my assumptions
Mhm.
all the time, right? Because that's where you get in trouble is you make assumptions and you just believe that's the only way to do it. So anytime I find smart people, please help me challenge all my assumptions and I will come out smarter with a better strategy. So I love that
And
philosophy.
that's the whole point. So we started a Facebook group, the Dental Real Estate Partners, to coincide with the show because it's one thing for us to have a discussion, right? But it's a lot more valuable to get people engaging in the discussion and then be able to ask follow-up questions to get greater clarity because there's always nuance. So if anyone wants to join us over there on our Facebook group, it's private. It's just for dentists. It's called Dental Real Estate Partners. You can find us and help kind of engage in some of these discussions. So.
And I think there's always value creation for everybody. I always think of the three tiers. There's I have mentors, right, that I learn from. I have peers that I learn from, and then I have mentees that I learn from, right? And so I always try to emphasize to folks too, even if you're young, inexperienced or just learning, we all learn from each other. We all have value to add. So in any forum or Facebook group, come with humility and gratitude but also the teacher always wins. We learn from others and so it's a great ecosystem. So
Mhm. Yeah. No, I agree 100%. And also, it's not even always like some factual thing or strategy around finance. Sometimes I learn from other people. I'm like, wow, you are a phenomenal communicator. Like, you are a great storyteller. Like, why are you so likable? And then I'm like, can I be more likable? It's like you can't learn anything from anyone, and everyone has something to teach you. So yeah, it's
Right.
just there's a lot to unpack with just interacting with other people, finding like seeing their good qualities and be like, I wish I had a little more of that. So yeah. We're humble teachers, we're humble learners. Ultimately, we just want to help people and grow ourselves. So,
Yep.
all right. So, fortunes aren't built on diversification. That was the title of the post after this debate that I had. And I said, if you look at history, most of the largest fortunes weren't built by owning a little bit of everything. They were built by making concentrated bets.
Yep.
Yep. So I'll just stop there first. What do you?
Yeah, I mean it's easy. I just ask people who are like the wealthiest people they can think of, right? Someone says Elon Musk, right? Okay, he made a bunch of money on PayPal, and then he made a bunch of money on Tesla, and now he's making money on SpaceX, right? It's not like he's like, yeah, well, I invested in a diversified portfolio, and tax loss harvested. Like that's not how you build wealth, right? Jeff Bezos. Amazon.
You can build wealth that way, but it's going to be at a very different rate. I mean, you will, right? But it's
It's
not going to.
$1 million next millionaire next door type style,
Yes.
right? Like teacher, engineer, making 100K a year, socking money away, being fiscally responsible on a budget, and you have enough money after 30 years. Um,
Mhm.
that's not how I live, right? I like to build life short. I like to build cool stuff and like do it at a faster rate. So yeah, you can build up wealth slowly that way. But if you're going to build big wealth, right? A Carnegie, Rockefeller, right? You pick an industry, you get you get the best you get to be the best, right? In that
Yep.
industry, right? That's how you build wealth. Um,
And
100%.
this is seen even, I mean, with so it's basically big business, right? And it doesn't matter if the big business is tech, if it's automotive, if it's real estate, right? It's building a big business essentially. That's what gets you there, right?
It,
And invest.
building a big business. Historically, it's always been like building a big business. You can also be like one of the founders, right? And you can receive shares of the company. You think like PayPal, it was like the PayPal mafia, right? At the top, like 5, 10 guys made a bunch of money.
Yep.
These tech companies, right? It's those first, 30 folks in these companies that explode to make money. But yeah, I mean that's where real wealth is created. And the more scalable your industry is, the quicker something can scale,
Yep.
the faster this happens, right? So that's why like you hear more about tech because like tech is often software, which is very easily scalable. Other industries, it just takes a long time to slowly grow things.
Yep. Yep. So I'll read the next part of this and then we can it'll just kind of work us through. So um, now I said, now some people take their big bets in the stock market, right? But for me, I said that feels risky. I have zero control over how public companies perform. So instead, if I'm going to choose where to diversify, I choose to index the market to get some broad exposure and save my big bets for where I have more control and agency, which is within my business and within real estate. So I want to make my concentrated bets on things that I feel better about and that I have maybe more control over.
Yeah, and I'd love to disagree to create more interesting conversations here, but I agree 100%. I was finance trade, honors finance at the University of Washington. The one thing they drilled into us is you can't beat the stock market, right? So why invest in the stock market outside of diversified index funds? It just or ETFs.
Mhm.
That's how I was trained. You're just going to lose. It's just like the gold. It's a distraction, right? Picking stocks, it's gambling.
Yeah.
Because the
So,
market is an efficient market, right? Stock market, it's an
yep.
efficient market. Unless you have insider information, you're not ahead of anybody else, and so you don't make outsized returns on stock market over the long term. You can get lucky in the short term, but not the long term. So 100% agree with that.
Yeah.
Um,
What is your competitive advantage, right? Like that's what you have to consider. And I don't have one, so not in the stock market anyway. But we know certain government officials, right? Our Nancy Pelosi's, right? That have a little bit of insider knowledge that have done phenomenally well because they have a little bit more information than the rest of us. But
the idea that you can grow your wealth quickly and get out of the situation you are in is very attractive to people who feel stuck, right?
mhm,
And that is the big attraction with Bitcoin, with GameStop
venture
stock,
capital.
right?
Yep.
Like these
Yep.
ideas that you can just like blow up your wealth. But you got to understand it's like investing in the lottery, right? You just get lucky. And yeah, but so much of our media is focused on that I think the average individual thinks they can make outsized returns on the stock market. They think they can make outside returns on these other types of investments, but they
Can
don't have
I?
the advantage.
I want to share a pet peeve of mine because I hate this in all arguments. You can't throw out like an anecdote and use that as like the rule of thumb because often people will be like, well, I know somebody who made 20% or doubled their money in a year in the stock market. And I'm like, yes, but that is possible. That's an outlier, but that shouldn't be the rule of thumb. Like, should you tell everyone that so that they go chase that and think that that is the norm, right? Tons of people would lose their money. So I hate when people throw out like an anecdote to contradict like just kind of a good rule of thumb. It's just like it doesn't serve you and it doesn't serve the majority of people to adopt that. But
We make more than the average American in dentistry because we've built a moat, right? You have to go to dental school, which is hard. You
mhm,
have to have a dental license, right? Like that, then you are making more in dentistry. And then like your income from dentistry depends on your ability to run a business, right? And perform as a clinician. And
yep.
the better you are at that, you will scale up your income. Um,
Yeah. I talked about that was in some of the comments after this post was essentially that, right? Like what are the barriers to entry and how are you poised to overcome those barriers in terms of skill or capital or time? Like what allows you to overcome those barriers? And why do go ahead, yeah.
you think about how long it becomes to be a dentist, right? You got to do like 2 years of prereqs. You got to go to and get into dental school. That's 4 years. And the 10,000 hours rule, which is about 5 years of being a dentist before you're good at that and running a dental business, right? So
Yeah.
that's 2 years plus 4 years plus 5 years. That's 11 years, right? Before you're starting to make probably a good income.
Mhm.
Okay. So when you tell me, oh, I'm gonna do stocks, which again, it's kind of showing you can't. But if you're trying to tell me you're going to do anything and you're going to be good at it and competitive advantage, I'm like, have you done it 11 years like you did as a dentist before you got good?
Mhm.
uh,
And how much money are you going to lose in those 11 years to get good at trading and doing big bets on call options and like that's what you have to do. You have to employ leverage in the stock market, and that's tricky. That's some tricky stuff to do. But so okay, so maybe think of that. So this is what I said. All right. So I want to make concentrated bets on things that I feel I have greater agency over and I have a greater ability to improve myself that'll ultimately create a better outcome for that investment, right? So in your business, for example, you could become a better dental business owner, operator, right? Whether you're great at systems, whether you're great at leadership, whether you're just like an awesome clinician, you can just produce a ton of dentistry, right? There's a lot of levers to pull to get better at. So like that's why I tell like if you a lot of dentists. Like we can have this debate another time, right? But just like if you want to be a practice owner, like that's the best way to optimize your earning potential and ultimately grow your wealth because you can get better at all these things to ultimately drive a higher income, which ultimately allows you to invest more and right, it just cascades from that. But basically I said this. So all the things that directly impact my returns are things that I can get better at within real estate and within business, whether it's deal sourcing, due diligence, value add, operations in real estate, creative debt structuring. Like every year I get a little bit better at these things, and I'm still not amazing, right? But I hope to be someday. So I'm going to keep putting in my 11 years, my 10,000 hours. But all things that directly impact my returns, right? Like I want to get better at. Now, if you want the greatest returns by doing the least, then you just want a dollar cost average into the stock market. Simple as that. Index, chill, like don't worry about getting better at anything. You just set it and forget it. If you want to grow wealth in leaps and bounds, you need to make concentrated bets on things that you're able to get good at, right? That I keep it simple. So I do both, right? I sit on my butt and I index and I just set it, and forget it in the stock market, and then I work my butt off in real estate and business so I can generate higher returns. So I think of the stock market as kind of the floor of my returns, and I think of real estate and business as the ceiling. So I can get better and raise my ceiling, and that's how I think that's where you should put your concentrated bets on.
And you're kind of a rare bird. When I was doing the dental, I was building real estate with the dental practices, but I didn't really have the bandwidth. It was very overwhelming to me to manage, so many patients, so many team members. That was very overwhelming for me. It was very hard for me to, I couldn't really take off in real estate like I wanted to take off in real estate while I was still, active dentist, active dental manager. Like I just never could do it. So, yeah, so I think we also need to be honest with ourselves. Honest is the wrong word. I think realistic. There
Realistic.
are reads out there that can do two things well at the same time, but I think that takes a rare amount of discipline. And it's not just intentional discipline. It's like your brain works in a certain way, right? Um, you're able to carve out certain parts of your brain for different areas and have those two worlds coexist at the same time. I think that is very hard for most folks. Um, that's very challenging because you also have all the family health, like all that kind of stuff too, right? It's not just the two that are competing, it's that as well. So, um, I
Yeah.
think most people can only be good at one thing, and that's what I see most. Every once in a while, you get an Elon Musk, but even
Yeah.
now, between like Tesla and SpaceX, you kind of get this sense that Elon almost wants to like dump Tesla. He likes the robot space, but the car business, he just wants to do like robo taxis and dump.
That's his that's his dentistry now, right? Like he's bored on Tesla. He wants to go explore the world, right? And make
it's
huge changes. He doesn't care about money. He cares about impact and change.
He does. He
Yeah.
does. So when you're thinking about this stuff, fortune not being built in, it's built on focus, right? Not diversification. So, um, yeah, think about getting really good at one thing. Maybe you can get good at two. But oftentimes it's just you know enough on the second that you're an educated um investor, maybe.
And,
That's
and, and I and I want to say this too, is like I built like my foundation of practice operations and stuff to not have to keep putting as much energy into that, right? So that I could free up my mental bandwidth to focus more on real estate. Now, um, that was a lot of heavy lifting on the front end, but I also didn't grow my organization like you did to the point at which it just keeps taking maybe more and more time, or at least the stakes get a little bit higher. We've talked about this before, but it was very intentional for me to just be like, I'm going to keep it here because I can manage it. And now I have more bandwidth to focus on this, where you grew yours much greater. So, like to give yourself credit, like you said, most people can't do two things well. Well, your one thing that you're doing well was bigger than the two things that I was doing. So,
That's a good point. I think what I learned from that is that's a good point. And like it takes you so many years to get good at something, right? And when you scale up and add multiple practices, what got you here won't get you there. It's a whole new set of problems that you got to
Mhm.
get good at again, right? And so if you just get really good at your one or two practices on the management side, right? And you get good clinically, then it's like you're refining things and making you're refining every year until instead of like, okay, we've got all these new problems, now we need new solutions. That's
Yep.
much more bandwidth. So I think that's really good. I think you maybe, if you do want to do two things, take the first one and really put some boundaries, some firm boundaries in there for yourself. That's smart.
I think so. Like even now, right? My friends give me a hard time that I don't place implants, right? They give me such a hard time, and I'm like, I'm not gonna go do that course. I'm not gonna learn that new procedure. I'm not gonna try to work it into our workflow because it's disruptive, right? For me, because I don't want disruption in that part of my life because I'm so focused on real estate. So saying no to things that I know are gonna stretch me back into that, and that's not where I want to put my focus right now. So
Okay. Yeah. Learning how to say no. Being
that's it.
realistic with allocation of time. If I'm saying yes to something every time before I say yes now, I think to myself, what am I going to have to kill to say
Yep.
yes to this?
Yep.
Because that is the reality. Our time is finite. Um,
Absolutely.
so like focusing back here, fortunes aren't built on diversification, right? You're
Mhm.
not going to get higher than normal returns on diversification, right? You're just kind of protecting your money and just, I always think like 8% stock market, right? Like that's what you're getting. And I think inflation's 4%, just based off of like historical, the math, how they used to track it. And even Trump's come out and said he doesn't like how they track the numbers now. He doesn't think it's accurate. So I just assume 4% inflation because the government's, they have a lot of debt. They're incentivized to have a certain amount of inflation. The more
Yeah.
inflation, the easier it is for them to deal with their debt, and they don't really have solutions for dealing with their debt. So this is a good one for them. So if we assume 4% inflation, 8% your net returns are 4%.
Yeah.
Your buying power is increasing each year with that invested money at 4%. And you compound that on a growth curve, it's not sexy, right? It's slow and steady, 30 years, like you'll be good if you stick to your budget, like Dave Ramsey type thinking, right? So, so if you want to scale up your wealth building, number one thing, focus on one thing, get really good at it. And if you're ready for the second one, don't keep changing the first one. Just stick to your cash cow model on the first one. And then
Yep.
and then when you think about the wealth building outside of your core business, right? That's when you start thinking about portfolio allocation, right? We've talked about this before. You know, $10 million wealth blueprint is investing $200,000 a year in index funds at an 8% return. Okay,
Yep.
simple numbers, right? That's option one. Option two is let's say instead of doing stocks, you just did all real estate, right? At a 16% return, just like when you add up income, depreciation, equity pay down, appreciation, leverage, and interest tax payment, like around 16%. And I can show that math on shows as I've done in the past. But if you take that 200,000 a year for 20 years at a 16%, you're going from a 10 million to a 30 million,
Mhm.
right? So you're not working any harder as a dentist. You're not making any more money as a dentist. You've just shifted your portfolio focus from stocks to real estate. Okay. 10 million in wealth after 20 years to 30 million. Good.
Mhm.
And then if you did like a hybrid of that, let's say like a 12% net return, it'd be about 36 million.
Yeah, I think you misspoke there. It was 10
Oh,
million stock market, 60 with real estate. Obviously, if you're gonna spread the two, it'd be 30, right? If you're going from 8% to 12% to 16%. Isn't the 16%
The
16%?
actually I misspoke on the 12%. I actually had a different flow, but the first two I believe are correct.
Okay. Okay.
Yep. 10/30, keep that simple. Um,
Yeah.
then yeah, I
And I
think
had go ahead. Yeah, finish out your thought.
I'll keep it simple at that. Just
Okay.
so I think those are our thoughts there. Like wealth is not built on diversification in the short term. It's a very slow, steady, long-term road to build wealth diversified.
Yep.
Once you're ready to know, you don't want to put as much energy into things. You don't want to think about things. You want to focus on living life and not earning income, right? And then it's more about protecting your wealth. So that's a
Yep.
different phase of life, right? Growing your wealth accumulation phase versus protection of wealth, right? You don't want to go back into the trenches and have to figure out business again. Like you just want to protect your assets and you're willing to accept a much lower return for that. So,
And I'll quick summarize it with this because this is what I rounded it out to is business ownership has the highest returns, but it is the biggest time investment, right?
yep,
That's the thing to get good at. Real estate has, I will say, above average returns, as Josh was alluding to, that 16% annualized returns, but it has a moderate time commitment depending on how active you want to be. Even
yep,
if you are to be fairly passive and partner with other people, you still have to vet the partners and vet the deal. Like that takes a certain skill set. So it's not completely passive. Stock
right.
market is going to provide the lowest average returns out of these three, but also the lowest time commitment. So that is your set it, forget it. You don't have to necessarily do much other than just plow dollars into the S&P or VTSAX or whatever your index of choice is. And so when you think of scaling stocks is the easiest, right? Just right.
Yep.
And then scaling dental, like, or your private business, probably the hardest. And then scaling real estate is kind of that hybrid. So you're going to spend a little bit more time in it, but it's going to produce those outsized returns. So that's kind of my sweet spot. And that's why I think we both like real estate as well. So yeah, that would be kind of my summary.
Well summarized today. Thanks for hanging out today, Reed. That's a wrap.